All right, I'm going to call this meeting to order. It's 4:01. Let's do the Pledge of Allegiance. I pledge
allegiance to the flag of the United States,
and to the republic for which it stands, one nation,
under God,
indivisible,
indivisible.
and justice for all. All right. So as the business administrator, I get the pleasure of calling for nominations for the committee chair. Do we have any nominations? Maura?
I'd like to nominate Jamie Fitzpatrick for chair.
Do I have
A second. Yeah, I'll second it.
Discussion. Okay, roll call, not roll call. All in favor, say aye.
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 Okay, there were no nays. So, Jamie.
Thank you. Thank you, Eric. The next item on the agenda is approval of minutes, but I don't see it linked. Have you guys seen these minutes yet?
I haven't seen the minutes.
No.
All right, so then I will get those out to you. I read these minutes on the last school board meeting. So you at least sort of heard the minutes at that point in time. I will circulate those to you today,
Okay.
and then we can proceed from there.
Okay.
Matt, you want to step us through the business administrator comments?
Sure. Okay, so this is basically the same information that I sent out last Friday, and for the people out in the video land there, we didn't have a meeting in the month of April, and there wasn't one scheduled for May. So I sent out an email to all the committee members, just giving them an update. And the first part is update for electricity rates. There's no update compared to the prior meeting. For Rick, you're new here. What we're doing is in November, we're going out to bid for electricity rates because our contract is ending. Right now, we pay something like 7.1 cents per kilowatt hour. And the latest quote that I got was 8.5 cents per kilowatt hour.
Okay. Thank you. Yes.
You got one now at 8.5, Matt?
Yeah, which isn't bad.
Considering that the residential is at 17, or was it 17 something?
Yeah, exactly. So, group net metering. Okay, at the last meeting, I spoke about the town of Kingston wanting to do a group net metering project, and what the leading theory on that is putting a solar farm out on the landfill out on 125. Basically, we'd be selling power to the grid at retail rate, and then we'd be buying it from Unitil at retail rate. So there's the town has issued an RFP, and so basically what they're doing is they're looking for a consultant that can give them the best ideas of what to do with that particular project. It could be that the town of Kingston outright buys it and maintains it themselves. They could buy it and hire someone else to maintain it. They could have another company come in and install it, and then we would have a purchase power agreement with that company. So there are different options, and this consultant would step through it. Okay. Other than that, nothing has changed.
Just Matt, if I could, so my understanding on this is they would be partnering with the district, because the district has far greater electrical needs than the town does.
Yes.
And then we'd have to look as a district at the financial ramifications of that, because if you're buying and selling at retail, we currently buy at commercial.
Correct.
Which is much lower. So we'd have to understand what is the net benefit. We need a financial analysis on this.
Yes. And that I'm pressing on that as a financial analysis. And nothing will happen unless the school board approves it. Okay. So I don't want you guys to think that we're just going to enter into an agreement or do something without school board approval.
Yeah, Matt, just real quick, I know I've spoken to a couple of the select board of Kingston on this, and I don't think they're that far down. I know the initial RFP is being done, but I guess to Jamie's point, I think we have to wait and see, what that solar array is even going to generate, because again, we are buying commercial, so this might not be beneficial for us.
Yeah, I've said a couple of things to the committee. One of the main things that concerns me about the project is if the solar array is down and we have to buy power at retail rates, I may not have enough appropriation in hand, okay? So I mean, there's quite a few risks that we have to address. We have to address like everything. We have to look at it with open eyes, okay? And quite frankly, the door opened just recently in the RSAs that allows for this group net metering. And I think we need to kick the tires on this, okay? And look at the project and really consider it hard, okay? Where I think we may be able, or the town may be able to own the array outright in say like 6 years. And then after that, it's gonna be the cost of maintaining the system. And that's what our rate is going to be based upon. So we may be able to get a rate that might be a sliver less than what we can buy on the open market ultimately. But we just have to look at all the risks and all the benefits.
I mean, I'm open to take a look at what the realities are for the program, but you know, we have snow coverage, you know, that's gonna be cleared off the solar arrays. There's a lot that needs to be assessed and accounted for as to what the maintenance costs are, who owns it, the liabilities, failures, warranties, you know, that whole process, then the amounts of money that we pay now versus what we could save.
Yes. I actually recorded the last meeting because we had it here at the high school, and I used the owl camera that we're using right now, okay? So if you do want to see the last meeting, I think it was very informative. That will get you up to speed. Just let me know and I can somehow get you the file. Okay. Is that it for that? I'm going to move on. I also last month had improved fiscal reporting. We're shifting our focus to year-end reporting, specifically opening up the new fiscal year, which is happening tomorrow. And then we're also coding the system so we can produce the year-end report. The year-end report is called the DOE 25. So those, you will see the DOE 25 because it's due September 1st to the Department of Education. And then that form also creates the unassigned fund balance. It's the amount of money that we use to reduce the tax rate. Okay. Right now, we're about a third of the way through quoting that DOE 25, and it's taking quite a bit amount of time to actually create that report. However, we're gonna, once it's done, it should take like 15 minutes to produce a report. Normally, it takes me like 4 days. Okay.
I think Matt, I think it'd be helpful. I know it'd be helpful for me. I assume it'd be helpful for you and for Rick. When that's ready to actually step us through it, because normally we get the DOE and it's a sheet and you have to sign off on it. It'd be helpful to understand what the
Individual
different pieces
pieces
are and how it works.
I mean, I can show you right now if you want to spend the time.
Not today. We'll put it on the
Okay.
agenda when it comes up, but I think it'd be worthwhile both for the public to understand what that is. It's an important document, but
Mhm.
also more importantly for us to make sure that we're understanding what it is.
Okay. Now, but on to the financial condition to the district. I provided a link here to the encumbrances that we've issued from the beginning of the school year through April 26, 2022. In that link, if you click on it, it's a Google sheet, okay? Oops. You can go and use the filter tool right here. Okay, and you can choose the period in which you want to look at. Right now I have it, I think, for the month of January. Okay, or you can clear it. Clear the filter. All right, my connection's slow.
So if I'm understanding correct, this is going to be, by using the filters, we'll know encumbrances by month.
Yeah, if you want to look it up by month. For some reason, it's blank on my screen now. I think I may have screwed it up. Select all. So now I have every single encumbrance that was issued. Now, we did know that there is a problem with one of the columns, and I believe it's the paid column. All right, but this is every single, what an encumbrance is for those that don't know. This is just, these are purchase orders. Encumbrance is like an ancient word in government. And all it does is it reserves appropriation to be spent on a particular item, okay? So the general fund appropriation expires on June 30th of every year. But if there's a purchase order or an encumbrance that's outstanding, we get to carry that over into the next fiscal year.
And this is supposed to be right now through what, Matt?
Through April 26th of 2022 is when I ran it.
Go to the PO dates. Let's see if I'm getting this right. The only dates I have in 22 are January.
Yeah, because the filter tool's on.
That's after I've cleared the filters,
Amen.
I think.
So I cleared the filter. You can see up on the screen. I've got one from July 1st of 21. So what I did was I hit this down arrow and went clear and then select all, and then moved down here and went okay.
I'll play around with it after. I'm not getting, I stopped at January 26th.
All right.
I'm doing something wrong. That's
If
fine.
you're familiar with Excel and how to sort the data, you can download it because it's in Excel. You can see it has an extension XLSX, and you can use Excel to sort the data.
That's fine. If it's through April 26th, then we should be able to see that information.
All right. The cash balance as of March 31st, this is the reconciled cash balance, is $4,568,275. This balance is sufficient to operate the district without any additional revenues for 1.5 months, assuming a burn cash rate of just over $3 million. To date, the towns of Kingston and Newton are current with their monthly assessment payments. Fremont School District paid its second quarter tuition bill at the beginning of February. The third quarter tuition bill went out today. As of March 31st, we recorded a revenue of $29,173,013, and it does not include the use of fund balance, which was used to reduce the tax rate. That's a budgetary entry to record, so it just doesn't get recorded. If we include the use of fund balance as a revenue source, we recorded 91% of our budgeted revenues. I'm anticipating meeting our gross budgeted revenues by fiscal year end. The only significant transaction to revenue in the second quarter tuition payment for Fremont for $943,799. Non-health insurance expenditures through, it shouldn't be January, it should be March 31st, was $20,347,377. And encumbrances were $8,557,405. The remaining appropriation is $1,484,920, or 4.89%. Okay. Just remember that this doesn't include health insurance, and a majority of the encumbrance here is payroll and related benefits. Okay. Now, March transactions of interest are $40,781 for heating oil for all locations, $22,154 for electricity for all locations, $32,968 for physical occupational therapy. This is special education services, $16,211 for speech therapy, $19,430 for psychological services, and $10,200 for athletic officials. Now, for athletic officials, basically what we do is we have to move funds into a checking account here at the high school, because we have to pay for our officials right there on the spot. They actually are handed the check when, after the game is played. Now, health insurance expenditures through March 31st were $2,960,751, and encumbrances were $1,368,377. $525. The remaining, including the holiday premium. So basically, the holiday premium, I just want to kind of tangent here, is the health insurance company, since we're almost self-funded, we get the benefit of all the profits that are in, or not the, I wouldn't say profits, the unspent funds in the pool, and they give it back to what's called a health insurance, I'm sorry, yeah, the holiday premium, okay? And basically what it is, it's a credit to the first month bill, okay? So right now, our expenditures are showing low. I actually need to do a journal entry to record that as a revenue. And frankly, it's a nightmare journal entry to do. So let's see, back to this. Remaining, including the holiday premium, is $598,000 or 12.15%. So we've reconciled health insurance and implemented encumbrances for retirees. And there's something else that's affecting the health insurance encumbrances or the remaining balances, which we're monitoring. Okay. There's just an accounting thing that we just have to kind of like, we're putting the screws to it, trying to figure it out. Revolving and capital.
Before you jump off, so I just want to make sure I understand the data sets. The non-health insurance expenditures in the write-up says as of January 31st. The health insurance says as of March 31st.
Yeah, that was a mistake.
It's so should they're
It
both
should
March
both be
31st?
March 31st.
Okay, good. Because I was going to say that doesn't match up with my January number. I'm missing something.
Here, I didn't just change it right here, March. There.
Okay.
Okay. Everything is through March 31st. Okay. The problem is I recycle this report every single month.
Yeah.
Okay.
I thought that must be the case from when I was looking at the numbers, but I just wanted to make sure I wasn't missing anything.
So revolving funds and capital reserve funds through March 31st, including the 2.5%. The total amount is $1,495,870. This balance does not reflect the school board authorization for purchases of teacher laptops for $50,667, student iPads for $6,230, and Chromebooks for $54,518. All of these were approved on April 13th. Okay. Now, moving on, I've been training our district accountant to fill out all the recurring reporting. And to start this off, what I've done is I've asked her to calculate what the amount, the 2.5% contingency fund is for next fiscal year. Okay. And the calculated balance is $537,817, which is a reduction compared to the current year of $7,195. And I'm going to bring up the form. And this is going to be the actual letter that goes before the school board. And the way it's calculated is, it's the net assessment. It's the amount of taxes that we collect from the taxpayers. We're being more conservative, where the state will include both the state tax and the local share of the taxes. We've only included the local share of the taxes. And so the amount is $537,815. And the 2.5% is set by district meeting. So it's as a vote of the taxpayers. Now the statute allows us to increase it to 5%, but we're not going to put forward a warrant article to increase that to 5%.
Just so for clarification, the district right now can only do 2.5%. It would require a town vote in both towns to increase it to 5%. And it would require the board to put it on a warrant to do so.
Yes.
But for this year, it has to be done because the town already voted for it, everyone to vote the 2.5%.
The 2.5% was voted on, I think, in 2016. Don't get me, I may be wrong with that date, okay? But once the taxpayers approve it, it stays active until it's rescinded.
Oh, okay, so this will happen every year until.
Yeah,
the school board
so,
takes it.
yeah, what happens is most school boards actually calculate this as part of their taxes in the fall. I already know this information I prefer to have the vote done in June, so I can have it on the financial statements and be accurate with it and upfront with everybody, okay? So,
Just to make sure that
Yeah,
that your question is answered. The town vote authorizes the school board to decide for up to 2.5%. It's the school board annual
Yes.
vote that decides how much, if anything, of that
Oh.
2.5% will be set aside.
and we do it.
okay,
every
not
June.
necessarily just used, just set aside, so.
Yeah,
So the school board has already voted 2.5% for. Because we're still talking about what year are we in, 22? So the school board already voted for the 21-22 budget that we were going to do that.
yes.
And then I believe the school board, did we already vote?
No, we're
For
gonna
the-
vote in June.
Okay, so in June, we'll vote for the budget that's already been passed for next year, but that's when we budget.
Right.
Okay,
So let me put this in commercial terms for you.
okay,
Okay, so, the amount that we return to taxpayers would essentially be your retained earnings,
mhm,
okay? The amount that we're setting aside in the contingency fund would also be a reservation of owner's equity,
mhm,
okay? So it would be like a reservation like, additional paid-in capital
okay,
or treasury stock or something like that, okay? But on fund accounting, it's a reservation of fund balance within side of, like your owner's equity, but it's called fund balance.
okay,
So, now we're gonna have a larger discussion on this because the tax law, I'm sorry, the statute actually changed and the understanding of how we can access these funds changed.
mhm,
If you want, we can tangent into it right now.
We might as well, we're talking about it.
Okay, so basically, the law previously was if we were going to use these funds can only be used for emergency purposes, and it has to be an emergency, okay? And to access the funds, we'd have to have approval of the budget committee, the school board, the Department of Education, and also the Department of Revenue Administration.
mhm.
Everybody would have to be on board to access those funds. The statutes changed now where the school board can authorize spending the funds. You basically at a public hearing.
Mhm.
So what they have to do is just issue notice to taxpayers and then authorize the funds at a regular meeting.
And then just to add to that, so when the board made the reservation last year,
Mhm.
it was not with the understanding of the change in the law. So when the board made the reservation last year, it was with the belief that you can't touch it absent getting the BudCon, the Department of Revenue, the Education Department involved. The law changed, I think it was 2020.
It actually changed before I went out on my medical leave. I did this on my medical leave. You guys voted it in during my medical leave. I updated this to include the changes in the statute, and for whatever reason, I didn't retain that information. So it's only really recently that I re-educated myself to the statute.
Yeah, but so that just means that we, when it comes time on the board to make that decision, that we're just clear with people that the rules have changed from the last time when we voted on this in terms of what we believe the rules should be. So just everybody knows up front, this is what it means when you put this contingency. This is how it could be accessed.
Mhm.
So Matt, I have a question before we move on. We've identified because of the budget what the amount of the contingency would be. Do we have yet a projection as to what the year-end encumbrances should be?
Yes, actually, that is a agenda item. Do you want me to do it now or?
I think it applies now, because ultimately that's where the money would come from, right?
All right, I do a projection. I do a wild. Not wild. It's my best guess. We're projecting to return between 800 and $1 million every year, this spring, this summer. And basically on the screen, oh, it's not on the screen. Okay, on the screen is my projection. I updated it yesterday using April data. And I'm expecting revenues to exceed budget by $324,000. And so basically, my budget projection is going to be within 1%. So I just want you to see how tight that revenue projection is. My right now, I have, these are the expenditures on the screen right here. Health insurance, and then I have to back out the holiday premium of $427,000. So Rick and Maura, normally the holiday premium is not significant. It's usually like $10,000, $17,000. Because of COVID and no one using their health insurance, it's like $400,000. These are big numbers, okay? So that's why I have to include it in my analysis. Now, non-health insurance right now, I'm projecting at 1.4 million or almost 1.5 million turn back, okay? But you have to understand with that, we still have 2 months of operation and stuff just comes out of the woodwork. Like today, I lost another septic pump at another building.
A different building?
Yeah, this is a memorial. And so that one's going to be substantial. So now there are other offsets that I have to remove from this. So at district meeting, we used year-end surplus to fund capital reserve funds and expendable trust funds. And these are the 3 warrant articles right here. And $175,000. And then I have to add back the contingency fund that was voted last year, because that contingency fund authorization is only for 1 year. Okay, and that's why we have to redo it every June. So it goes back to the taxpayers. So I'm at 2.3 million that goes back to the taxpayers. Then these are where things can be moved. We have the contingency fund at year end, which we spoke about that before. This is like $7,000 less. You can see right here, it's 537,000, where previously right here is 545,000. Then Tom's Big 3. Okay. Then I have other things that I just have to pay for. Okay. The Bakey septic pumps are $40,000. We have some sewer line repairs that we know of that are about 45,000. We don't have the actual numbers going to be coming in June. We actually had I had a $10,000 contingency here for there was a curtain at Bakey School that failed, and I thought it was going to be 10,000 repair, but we got a vendor to fix it for 500. We also have to repair the steps, the emergency steps at Bakey. We're assuming it's going to be 25,000. I don't have any costs set aside for moving grades 3 and 6. I can't foresee anything, but I just have a placeholder for it.
I think we've started to jump in, but I think I've heard multiple times that that's going to be done at no cost. So I just having that on there is a little misleading. So
There's nothing there for costs. So this is just in case.
Yep. Okay.
And, these are my other prepaids, and it comes to my answer. Right now I'm at 1.3 million, but I'm still projecting 800 to $1 million.
Couple of questions if I could, if you're all set.
I'm all set.
One thing to check, I don't know if it's in encumbrances or not, is I believe the wireless upgrade was improved, and I don't know if those have been issued or not, so that's 70,000. We just want to make sure it's not counted twice.
Right here.
Right, it's there as something that's still coming, but if you got your encumbrances through and we already issued the POs because we voted on that the last meeting,
Yeah.
it could be in the encumbrances also. I don't know that it is. I don't know if the appeal did or not.
I don't think we did, Jamie, to be honest, and I could be wrong, but I don't think we talked about upgrading some of the hardware, if I remember correctly. But I don't think we finalized upgrading like the main switches and the hubs and stuff like that. I don't think that's what we were discussing.
This is just the wireless access.
Yeah. Which is
Okay, so Rick, what you're saying is the one that we voted on is a separate and distinct thing than the wireless.
I believe so, yeah, I think, because we think we still have to talk about, because I think, and again, I'm going off memory, but I think we discussed potentially getting a quote from Consolidated for the switch work and stuff, and I thought that it wasn't an option, but there were still some main switches that we had to get changed out. But again, I'm going off memory, and I could be wrong, but that's sort of what I recall.
I'll make sure the minutes I'll check with the minutes.
All right.
There are two things that are not reflected in here that I'm aware of. And one of them is someone's IEP changed, and we're gonna have to have one-on-one instruction. And then another one, we're changing up the location of where their tuition payment is going to. And so I don't know exactly what the fiscal impact of that is. And so as you can see, I can absorb it and still meet my target.
So those changes would be this year within the next 6 weeks.
Exactly.
Roughly.
Yes.
Because that's what we've got school.
Yes.
Okay.
Right.
The other question, if you go back up to the holiday premium. So I understand the holiday premiums are like a one-time kind of COVID thing. But I'm surprised that we're backing it out because we did get that one-time COVID
Yeah.
amount.
I'm backing it out down here because it's in my expenditures right now. And I have to move it up to revenue
Ah, okay.
because it's a net zero.
I see where you're moving it. Okay. I didn't pick up on that before.
Yeah, it's fine.
Okay, good.
Okay. I'm gonna close this. I'm gonna go back to my, oops. My business administrator's report.
Is it fair to say, I think based upon that list, looking at some of those big three items, I think, is it fair to say that's probably like a worst case analysis? Because I think the 129 that's listed there for the auditorium, based upon discussions we had at the last meeting, we thought those costs were a little high. So there were some lighting costs, suggestions that Jamie had made about getting other quotes and stuff. So is it fair to say that could be like the worst case scenario?
I'm hoping, yes, but yes, that would be fair.
Okay.
All right. So let's see, where did I tangent? I'm right here with Jamie. So Jamie and I recently had a discussion about how grants affect the general fund or affect our general fund appropriation. And what I want to be clear with everyone, I've only been giving you the appropriation that affects tax dollars. And I'm not giving you information about federal grants, state grants, local grants, and specifically the question that Jamie asked was, how are we accounting for ice hockey? And he wanted to see the revenue and the expenditure side. Now, all these are recorded in a fund separate from the general fund. And so on a commercial standpoint, it's like having another company, okay, where the general fund is company A and the grants are company B. They don't interact, except we have interfund loans, like there'd be like intercompany loans, and then we have also transfers of equity, okay, because you can only record the revenues once within the overall entity, okay. So there really are no transfers other than those that go through the general fund budget and the budgeting process. So a couple of years ago, the only transfer we had was a $30,000 subsidy from the general fund to the school food service fund to bring that to whole. And we haven't had a transfer in the last couple of years, okay? So what I've done is I provided a listing. Let's see if I can bring it up. Oh, it's not showing. Let's do screen.
Page down. It's on the second page, I think.
There it is. And see if I can zoom it in. I provided in that list all the different grants that we have. Okay. So we have at the top here, Seminary Trustee grants. We got some Exeter Charitable Foundation grants. We have, I'm just going to scan on down, a grant from Unitil, another grant from Unitil. We have a music donation. Oh, it's not staying on my screen right. Let me see if I can just hold it here. And then down at the bottom, these are federal grants, where when I talk about the creating the general fund budget, or creating the appropriation that goes before the school board and the budget committee, I say I'm including all the title grants. And what I mean by that is you can see there's Title 4A. IDEA is actually a title grant. It's called Title 6B. Then Title 2A, and then Title 1 down near the bottom, and there's another 2A and a 4A. Those get put into the appropriations. Anything that we don't put in as an appropriation that goes before the school board and the budget committee has to be approved at a school board meeting with this unanticipated funds statute. And you've seen, like, when we get a new grant, like the CARES grant, we went through this process where we put out notice to the taxpayers, we had a public hearing, we spoke about it, and then we accepted it, okay? At that point, the district can spend those funds. But if we put it as part of the budget, we can just spend those funds, okay? Anything that's up here at the top has to be approved by the school board. So you'll see annually, the high school principal will come in and say, we got grants from the seminary trustees. This is what we're spending the money on. We have a public hearing, the school board accepts it, and then we can spend it.
And what I had thought, the reason for my question is, when I saw expenditures in the manifest come in and say ice hockey and other things that were associated with the grant, I expected, oh, there's the expense. I went up to the revenue side and said, geez, I don't see the revenue. Where's the revenue for that? And the revenue goes through this sheet. I knew the federal ones weren't in there, but I didn't realize, I thought the others were going to show up on the revenue side, and then Matt showed me where they came back in.
Yeah, it's in another fund. Okay. So that screen's flaking out. Okay. Business administrator comments. Oh, come on. I have to move this. Here we go. Let's see, go farther down. Let's see. Yeah, we have a special education budget adjustment that we need to approve at this meeting. And that's it. That's what I have.
Can you open that?
Sure. So basically, it's to reallocate funds for the cost of contracted services for DHHS for a special education student as outlined in their IEP. I can't dig into the details of it, so I really can't say more other than that it's for a contracted service. And what we're doing is we're taking it from 5 different line items and we're moving it to other professional services within the special education program.
I was just going to ask, it looks like it's all in special education, so it's line items to line items within the special education budget.
Yes. Yes, if I go outside of special education, I need approval of the full school board. This committee cannot approve it.
Motion to approve? that what you're looking for here?
Yes.
Yeah, we need that.
Second.
All in favor?
Aye.
Thank you. Okay. Now I'm gonna jump down on the agenda to the trust and revolving fund balances.
Okay.
Now, again, this is the second month that I have reported something that has been linked directly to the accounting system. Okay, so for individual balances, special education expendable trust, we have $241,217. And for those that don't know, off to the right-hand side right here are the warrant articles that approve that particular fund. So you can see what the purpose of this fund is. And then also I have highlighted here in yellow that there's a change to the reporting. Basically, I get these numbers from the trustees of trust funds for the town of Kingston, because the town holds the funds and they're going to a quarterly basis as opposed to monthly. So you're going to start seeing these numbers change less frequently. Okay. The second one is the capital improvement and maintenance fund. We put in $50,000 this year. The balance is $273,078.51. I'm going to scan on down here to the unanticipated educational expenses. Again, we moved in $50,000. And by the way, you vote in March for the balances, and we're using year-end surplus, which is June 30th. So it becomes available July 1st to put in the funds, okay? So these balances are from district meeting in 2021, and the funds were transferred in July of 21. So for the unanticipated educational expenses, it's $200,228.40. And then the facility use revolving fund, this is where the rental income from SLC goes into, and the current balance is $236,333.64. Now, again, this does not include the teacher laptop, the iPads, and the Chromebooks that were approved at the last school board meeting. So that gives us a total, including the contingency fund, that gives us a total reserve balance or funds in reserve for $1,495,870.
Just to be clear, so that's basically $1.5 million. We have an approved from the 2022 election, an additional $175,000 going into reserves.
Yes,
So that'll take you up to 1.5, 1.675, 670.
yes,
And that will come out of that will be the items you just listed that we approved at the last meeting that will come out of the expenditure fund.
yes,
And those would be posted, to your point, in July sometime.
yes. And I do want to kind of tangent here. One of the things that I would like to see is when we approve the strategic plan and build like the improvement plan, that we tie the capital improvement plan to the balances that we maintain in the capital improvement and maintenance fund. Okay, this one right here. Right now we have 273,000 in there. I want to make sure that we have a plan on when we're going to be using those funds and how we're going to be using those funds. So we're maintaining a sufficient balance according to a plan, but that's all tied back to that strategic plan. Okay. Are you all set?
Yep.
Okay. So I provided the expenditure reports and revenue reports. I spoke about those in my.
Can you open just so that I can get the feedback from everybody on just the expenditure report? Anyone of the excluding health, I suppose. It's a big dollar one. Biggest dollar one. Yeah. So if you just go to the last page. So I like to see the column data in columns as opposed to the freehand that Matt does in the business report. I don't know what your guys' perspectives are. This at least helps me when I look at this as to know what my year-to-date, what cost, what was my balance was, what my encumbrances are, and what my remaining balance is. That 1.484, the second to the last column on the right, is my remaining encumbrances. But I don't think that we need to do both. I didn't know if you guys have a preference one way or the other. I mean, I would like this, even if the preference is to just go with the business manager's report, just in the file. But do you guys have any perspective or opinion as to how you'd like to see this data?
Is this, what are you talking about in the superintendent's report?
No, so Matt just went through his report and talked about where we were with expenditures and where we were with revenues. It's all coming from these charts.
Oh.
So his numbers.
So all those where here's my revenue, here's my. I like that because you told me like how you came about your.
Okay. Well, the purpose of his question is I need to refine how I'm reporting out data, because a lot of this stuff is really confusing. And the more we refine it and tailor it to the readers, the better it is for everybody. Okay.
To me, I'm fairly indifferent. I want to get this regardless. So if you two would like to see, hey, all I need to see in the meeting is the business administrator report that has that information, then we don't need to add showing this in the agenda. We just want it in our files.
Yeah, I'm okay. I mean, yeah, I would be okay with that. I like when Matt has the explanation of here, I've taken out the important bullet points of here's how I came up with this and this, and I like to see your math of how you made it work. But I understand what you're saying. It's nice to have that as a reference, but
Yeah.
I guess we don't need to go.
Rick, your thoughts?
No, I think I'm good. Visibility to the report and our shared drive to the report that I'm looking at now is fantastic. And, during the meetings, we'll have the explanation from Matt if I'm understanding it correctly.
Okay, then Matt, that'll save some time going forward. I
Okay.
just want to get that clarification because I know what my preference was, but I want to make sure that
Yeah, I don't
you
need
guys
it.
are.
I don't need it to open during the meeting.
Oh, darn it. I'm looking at the next agenda item, which is the status of Chase Field. I know I reported out the cost in the prior meeting, but I don't have the estimate, and I don't know where that went. And this is going into a larger conversation too.
Yeah, so the question that I asked Matt was, if you recall, we had discussions on Chase Field. And we said, well, we believe the estimate is, and I'm going by memory, so don't take this to the bank, but somewhere around $39,000-$40,000.
Yes.
And then we issued in the manifest, there's 10,000 for this one time, there's another 10,000, there was 7,000, there's probably some other ones. And the question was, well, where did we end up on our spending on that project versus what we estimated? And the system does not provide us with that. So that's a manual request. And Matt was looking into and he'd be providing us with information as to, well, the system's capable of doing that. We didn't buy that module. We didn't buy the project tracking module. And so then the question becomes one of, what would that cost be? And is there enough of a benefit to be able to track projects in that manner?
Do you know that answer?
No, actually have reached out to Tyler Tech and they're crunching the numbers. And so basically the cost to it is really dependent upon the size of the district. So like if we're $1 billion district, it's going to be like $400,000 or $500,000. Since we're a small district, it's not going to be, I'm assuming it's going to be like $4,000, $5,000, but that's just an assumption. Okay.
It's a big difference. Yeah, I mean, yeah, I mean, look, if it's, I guess, I'm a Microsoft guy, right? So, there's project management free software that's available. I don't know how many projects we have going on right now. To be honest with you, that we couldn't do this off the side. But if it's 4,000, it makes it easier. And we're pulling data from one system. Then I'm all for that, right? Because then you're manually pulling data from multiple systems to track a project. But I guess real quick, I don't want to get off subject here, but I thought I heard you say we don't know what the original estimate was. I mean, wouldn't that be in meeting minutes from one of the meetings prior to
meeting minutes?
We just got to go back to the minutes.
Yeah. Okay. All right.
But the point is to have a larger discussion about this project module, okay? And basically what it is it can capture data throughout the entire accounting system, regardless of which fund it's in, and I can report it out as one big giant project. So a couple of years ago, when we got our first COVID grant, some of the expenditures were in the general fund, some of it was in the special revenue fund, but I don't have one report that combines that all to give you one big giant number. I had to actually go in invoice by invoice and generate that data.
Yeah, that was my point. That was the point that I was trying to make. So
Yeah, but the Microsoft project is really meant for timelines. This is more meant for tracking costs.
yeah, so it's sort of like, conversion, a CRM system, right? And I think now that we have the budget was approved, if I remember correctly, all the coding will be corrected this year. So you should be able to pull all that information if you get the right program.
Yes, yep, so that's coming out. Now for the high school roof, we do have a vendor. I think it's about $5,000 to fix the atrium over here. It leaks. And actually what just came out since we met last is we've been having damage to the sheetrock over the high school's, I'm sorry, the principal's office. And that's actually like delaminating from the wall. We've actually had to go and remount all the lights because the water is starting to get in behind the wall. So if you go out there, you'll see.
And what's the source of that? Do we know where the water's coming in?
The source is the siding is really the biggest source of that water damage.
I know that from when I was on the facilities committee, there was discussions about doing the siding in sections. Is that like the top section to do?
We've actually peeled it back and we have a lot more to discuss, not in the public.
Okay. Well, I'd be to the facilities committee, so would be under the facilities team going through that. Okay.
So the other items on the agenda we've actually spoken about.
Yeah, I think we covered it.
Can I just get an update on the roof real quick? Maybe I'm just not remembering it.
Okay, so we've been talking about different roof projects, and the one that is listed here specifically is where the atrium meets the silo. Because what they're doing is they're trying to match up a triangle to a circle. The water is always kind of gotten in behind that triangle portion and is running down the wall. And we're trying to come up with a solution to try to fix that. And we think that by putting in a flashing, we may be able to get multiple companies right now because the item is about just over $5,000. The siding is another problem that we discussed in the facilities meeting. And when you're in the library and you look up, there's a hole in the ceiling. It's because the water is getting in behind the siding and it's coming down the wall and it destroyed the ceiling. I don't want to put up a new ceiling until we figure out where this is coming from. And when we go up there, there's a big gap between the siding and the window. And let's just say there's more to come because we did peel it back.
Okay, thank you.
Other leaks would be of notable interest would be the greenhouse roof, the windows.
Greenhouse windows in the library, right?
Yeah, I thought last time we spoke about that, or at least the last time I spoke about it, was on the budget committee, and I thought there was going to be some discussion about a cost to repair and a cost to replace, meaning getting rid of the windows. And Tom said he was going to be working on that.
Yeah, right now we're looking at trying to put, we're going to screw Lex sand to the top of the windows. And we think that, and we have it on hand. And we have it on hand because of COVID.
I have some Flex Seal in my garage I can bring over too.
Yeah, we can make it float.
Yeah.
Matt, did you have anything else?
I don't have anything else. Do you guys have questions?
Mara?
Please fire away.
Rick, anything from your end?
No, I don't. Matt, I sent you something via email. So when you get done with the meeting, if you just take a look at it and then get back to me, but I don't have any questions for now.
Great.
All right, then the meeting is adjourned.